Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, the 4th day of December 2014, and this is the daily report for gold and silver. We have a mixed bag in the precious metals market with gold trading slightly lower and silver, platinum, and palladium all trading higher on the day. Platinum having its biggest showing, up about $9 on the day. First to gold. As you can see, it is under that elusive 1207. That is the mark that we have been looking at. It's currently trading at 1205.63. Now, that puts it off roughly $1 on the day, $1.90 on the day. The low, though, 1201.10, so it has been able to hold above 1200, or that what I call a century mark, the high 1215. Silver showing a small gain on the day, roughly a couple of cents, about 4 cents on the day, 16.44, the low 16.31, the high 16.75. More on silver in a little bit, but I do draw your attention on this daily chart to the lack of activity or range that we have seen in silver over the last couple of days. And also at the end of the show, I will be having a short clip on our loyalty program, which allows you to view the daily video at about $83 per month. For all those that are interested, you can watch that at the end of the show. Traders, no doubt an interesting day in the markets in general, precious metals, of course, but also the equities, oil, dollar, and gold. We have the equities market slightly down today. We also have the dollar trading well off of its highs. In fact, it had broke over 89 in terms of the dollar index, currently trading at about 88.64. So we do have a lower dollar. We have a lower equities markets. We also have lower oil. Oil is trading, I believe, below $70. Last time I looked at around 67, and yet we have gold under pressure. So as I look at it, we know that we have thin volume going in between Thanksgiving and, of course, Christmas, New Year holiday. But with these fundamentals that I just mentioned at play, you would have thought that that would have been more supportive in terms of gold prices in the gold market, because, as I said, we are witnessing gold trading a little bit lower, but we also believe that a lot of the spikes that we have seen in the market have really been technically based at best. Now, when we look at this market, we've identified 1207. That was our former resistance. Now, the reason that we looked at that as resistance is if we look at this trading activity, call it the latter part of November, right in here, every time this market came in to test the 1207 area, it would fall short and then begin to trade off or lower, trading lower off of that. So we've identified this as resistance. The market did pop above that. You can see that right in here. This was that dramatic rise. I believe we hit a high of about 1221. You can see that here. I've moved this particular fib retracement now from 1221 to the low so we can get some numbers there. Interestingly enough, the 23% retracement level comes in right at 1200. So in terms of a current support level, now that we are below this area of 1207, we're going to look at this particular area of 1200. And of course, we've already identified 1180, the 61% retracement. And that, of course, is a retracement from this high at 54 and the low at 1330, 1331. That being said, though, as this market's moved up, we can say on a technical basis, we have now seen a series of higher lows, and on a very, very short-term basis, when we look at this high here at around, 1208, our new high at 1221, we do have a series of higher highs. Wasn't able to sustain or hold that, but really for me to get ultimately bullish on a technical basis, I would have to see us take out this 1254, the most recent high before the market came in and did this big drop down to our new intraday low, which is around 1131. Now, with that in mind, though, we have to take credence to the fact that the market has moved up substantially off of these lows and moved on a technical basis into a bullish mode. So what does this most recent activity over this last week or 2 weeks, call it since Thanksgiving, and we had the dramatic fall and then a dramatic rise all in the same day, what is that telling us? Well, The one thing that we can see, our basic current model is to see lower pricing. We've done that with our Elliott wave count, and I'll put that in a second. But the fact is that we did break, and we broke fairly hard as it came through this compression triangle. However, and let's go bring in a little bit of a shorter term chart. This is a 3-day chart. I think the one thing that's very apparent is that we've had really good support, and we are back above this former triple bottom, and we can see that right here. Now, all things being equal, in terms of the way our model is looking at our basic sell-off, meaning our set of 5 waves, 1, 2, 3, of course, this long compression as 4 in our 5th. If it follows our Elliott wave model, it still has the ability and some pressure to the downside to break below, call it 1208, which is currently where it's at, 1180, where we have some real support, and we have our lows down at around 31. But if we are going to have this 5th wave anywhere near equal to wave 1, which is our basic modeling tool, then we could in fact see some continued downside. Now, on a bullish note though, we have held up really well, and as I showed you on our short-term charts, we have had a series of higher lows, but we haven't really taken out that 1254. Taking out that 1254, that would be a real signal to me. Our current resistance that we're looking at is roughly around 1225, and we've had an intraday high, as I said, of about 1221, just shy of that. So I believe, as I said, for the last couple of days, we could in fact be range bound with a bullish kind of undertone to the marketplace itself. As I said at the beginning of the show, we are looking at our dollar chart. You can see that we've absolutely come off of, and let's make sure I've got all of our days, and I think there we go. You can see that we did come down, and now we're trading at roughly 88.99, so we're back into somewhat of a positive territory, and that is now moving back up near the highs. And as well as the equities markets are currently under a little pressure. But as you can see with the equities, we are off of the record top, but we've firmed up a little bit just in terms of the Standard & Poor's. Last time I checked the Dow Jones Industrial, it was unchanged to down a little bit, so we'll have to check that. But we do have those factors weighing in the market. But as I said, I absolutely see somewhat of a disconnect between oil, equities, US dollar, and vis-a-vis gold. So as far as silver goes, as you can see, let's make sure this has been updated. There we go. So as you can see on this, we are currently in silver trading under the resistance that I've identified roughly at 1655, a 23% retracement. And that's a retracement of the move from 21 all the way down to this more recent low at 15. And I believe this is more a valid place to put it, and the reason it is because this is really that one wild erratic day, that swing that we had at the beginning of the week. But as of the last 3 days, we have had almost a subtle to no change in silver as it attempts to really find its way. My sense is, as I said yesterday, we would have to see a move and a close above 1655 in the same way we would have to see a move and a close above 1208 on a sustained basis to feel as though we would see a continuation in the rally in either gold or silver. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the daily wrap-up and review. And again, for those that are interested in the loyalty program, here's a short clip on how to enroll. Bye-bye. First off, I want to thank all of our subscribers for the loyalty that you have shown us over this last year. Starting last year, I started a program called the Loyalty Program. Now, the Loyalty Program, I am going to repeat it, is only available for 1 month from now until January 1st, and it will allow you to get our best pricing ever at a maximum of about $83 a month. Now, all of you who are viewing this video are actually eligible for this particular service. And the way that you would enroll, you know, from the top, you've got these options. Go ahead and press My Account. And then once you're at your account, press Add Renew Subscriptions. And as long as you're an active member, and by viewing this video you are, you're going to get a couple of new choices. The first choice allows you an annual membership, $999 per year. It comes out to about $83 per month. It is billed annually. You would click that, and we have added a new one for those existing loyalty members, or for those who choose to. You can now get a lifetime membership, $2,999, $29.99, and this will allow you to have an account really that never expires. Now, with the Loyalty Member Gold, of course, you're grandfathered in. Your fee will never change. It will never go up. And to enroll in this, simply click on the option that you choose. And then once you do that, click Next. When you click Next, you'll get a screen similar to this, which will allow you, without a PayPal account, to simply use your credit card and go in and enroll for the loyalty program. We will be sending out a special notification, but prior to doing that, I wanted those who watch our daily video the opportunity to get this first. Again, this option will only be available till January 1st. For those of you who have been with me for a while and are looking to stay, this is really the best, most cost-effective way to get the Gold Forecast every day. As I said, at minimum, it runs $83 per month. And of course, the lifetime, it's going to be much less as the years go on. Again, thank you for your support.